Hey everybody, it's Michael Robbins. Early on Monday, July 27th, 2020, we've been tracking the market reaction and media sentiment about COVID. Gone about a week without publishing one of these, but the the news is still pretty interesting and contradictory. So we've got gold reaching new all-time highs, and there's a great story about that. Not really much on Seeking Alpha, um, which usually has some of the most intriguing analysis. But over here on Fox Business, investor anxiety turns to greed, driving risky market melt up. And one of the best quotes in this one, um, talking about why the market is going up, but while also gold, the safe haven, is going up as well, and it not
Reliability is
being
everything.
just
So if your
because
network's
of
down, you're
it
down.
being a safe
And that's
haven,
why you trust
but
us,
because
the most reliable network in America.
the threat of inflation. And I believe I've got this.
Let's get
This
to the
audio
markets
coming
again because
through. Obviously, talks of coronavirus are everywhere. Um, so let's see if I can find that. This is right here. It is amplifying bullish wagers while also paying more to hedge their bets. Um, it's really a fascinating read. Oh, and silver looking to do a bit better than gold, which I believe silver also reached an all-time high recently. And you know, one of the thoughts that I had about um, fueling fueling this growth is, yes, there is more cash in there. The Fed might be contributing to this, but the market is understanding the temperament of the government and how much it's going to throttle things back with lockdowns and how much it's willing to take risks. And um, I think that a lot of this fear early on was due to that uncertainty. There's uncertainty about the virus, but also how are governments going to respond and how are people going to respond. And this mask wearing controversy is something that keeps coming up. President Trump recently changed his attitude about that, now suggesting it's a patriotic thing to do. Um, Coming over, CNBC had a couple really good ones here. Oh, this was mind blowing. The ratio of companies with insider buying compared to insider selling is at 0.27 in July, the lowest in 20 years. So the insiders are thinking their shares are trading at a high, and um, they're more compelled to sell than buy. And I also thought this one was interesting. Um, Individual investors are a big part of the market over the last few months, and she says, "I'm excited to see it, but I'm concerned they don't know what they're doing with the information, the risks associated with it." And so um, you've still got um, folks out there who are saying, we're growing up to a bubble and it could pop, and others explaining away the market growth, essentially justifying it. Oh, and part of it is technical. The index is made of certain tech components that have been performing well, then those indices look pretty good and the stock market looks pretty good, but that doesn't necessarily indicate a something broader. It would be interesting to see a restaurant ETF. If one exists. There's got to be an ETF on everything these days, right? 5 restaurant ETFs to sink your teeth into, published in September 2019. Yes, yes, fine. All right, let's find a ticker here. Let's see. Let's see. This one PEJ. I've heard that one. Food and beverage. I think that's too broad. Thematic. That might be a good one. 60% Starbucks. Consumer discretionary. More than 10 of its 97. So, yeah, that's a little bit of a stretch calling it a restaurant ETF. Maybe going back to that, yeah, PEJ. Let's have a look at that. Going to want to catch it all the way back to September 2019 when the recommendation came out. You want to sink your teeth into Invesco, Dynamic Leisure and Entertainment in September. Oh, ouch. So what was that? Kind of in the 40s and now hanging in the 30s. What a fascinating chart. While those the Nasdaq and the S&P look so strong when you isolate leisure and entertainment, the stability here is really quite remarkable. It looked like it hit that trough, yeah, around the same time in March as the broad index and struggled in trying to match that return and then just gave up. No, we're not the Nasdaq. We don't have tech stocks. We're leisure and entertainment, and we're crippled by what the market is viewed as about 25% of its value. That's an interesting one. Well, I think I'll wrap it up here, and we will continue to watch and monitor and report on what people are saying. So when you can look back, you can say hindsight is 2020.